The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days at 11 o'clock till noon Eastern Time at 877-927-6648. I'd love to hear from the international crowd. Let's see. We've got, well, thank you first of all to our hosts. Great programming, and we're going to have programming all the way through until 5 o'clock today. So stay tuned, and let me give you the numbers. The S&P E-mini is down $1.50, and I'll do this quickly because I just lost it. Let me find it again. That was silly. I had it all perfectly set up, but it's okay. It's very easy to get. Find the S&P 5-minute chart right there. Click. Here we go. And we've got, we've made a peak F in the Chapman wave methodology. That's in the 5-minute chart. So now we're down 225 from the high today of 2187.87. 2187. I'm looking at the S&P cash. I use this concurrently with whatever else I'm doing in the futures, in the E-mini futures, different time frames. Regardless of whether there's no overnight trading in the cash, I have no idea why, but somehow you still manage to get these peaks that are very important in the Chapman wave methodology. Well, all of us who do anything with the Chapman wave are always absolutely mystified at how even when you're missing, for instance, my 120-minute chart, let me show you the 120-minute chart right here, it's lopped off. It's a 130-minute bar, but it still doesn't matter. Look what happened. It went to a peak E at 2186.25, and then it went sideways, and then it just popped a tad 50 cents higher to go to, I'm calling it an F for now, with the MACD and stochastic declining. Look at this. Look at this trading band. Isn't it incredible that since the August the 5th, it's actually a little bit before, let's call it August the 5th. So that's a month. We've been trading in this band, one of the narrowest bands that I can ever recall seeing in the 120-minute chart. I often talk about rectangle formations lasting a lot longer than your patience. Wow. Just look at this narrow band between 2186 and 2150. Four, but we can call it really 2160. It's just been stuck there forever, but I think it's getting ready to break out one way or the other. We'll talk about that in a moment. Let me get out of this. I'm just going to give you parameters right now and just say if the E-mini breaks 2179 support, I think it's going to go quite a bit lower. 2176 is a 200-period exponential moving average. If for somehow there's another burst of strength it's been trying all day to try to bounce, and it can get back to the 2186 area, that's going to be a positive. I could not deny that that could set off a very nice extension. So I'm going to just move out of this for now. I want to do all the numbers before we run out of time in this first break. Number one, we've got the E-mini down $1.75. We've got a peak D, and I had to put a down arrow because the technicals were fading. The price was under the 200-period moving average at 2191.50, the high of August the 23rd. And interesting enough, we've come up to the 21, what was it today? 21, did I say 2180? Oh, why did I just forget that? 2186, I think, yeah, 2186s, and in fact, we haven't broken above, and the technicals are trying desperately to rally, but so far, it has supported the 9-period exponential moving average of 2177. It's really the weekly chart that's going to be absolutely key. So let me go through all the numbers now, and I'll do this individually. INDU, the Dow is down just 31 points at 18,506 in my subscriber letter, my newsletter called The Opening Call. What's very interesting about it is that I mentioned a couple of things, and one of them to me is really very important. I'm going to go to this chart right here. This is the overview and market today section. and I'll discuss certain aspects like General Electric. In fact, my Dow Quartet, GE, IBM, Triple M, and UTX are not acting very well at all. GE is especially negative. What is it now? GE is, if I can just find it right there, GE is down 20 cents a game. That's 30.06 at 30.85. Not good. So, and that's saying to me, be careful. This is, GE is always a heads up for 20 years or something. I've used G as a short-term market indicator, and it's telling us just to be very careful. The dollar spiked up yesterday and it's pulled back today. Gold is now down. Dollar's trying to rally. So now I'm going to continue. So in the overview section, what I said is, if the Dow is plus 50s with the VIX in the 11s, that's good. This is at mid-session. If the Dow is minus 40s and the VIX is pushing into the 13s, and right now it's only at 12.09, that's going to suggest that there's going to be weak action. So I'm just trying to keep it simple, and I'm saying at this point we remain in the sell mode, and that's all I'm going to do. The Dow, we've got a sell mode. We've added to the short this morning, to the short side. Didn't add to the long side, so we're going to be watching very closely to see what happens. Dow breaks under 18,450 is a warning, 18,400. It says, hey, be really careful here, because all of a sudden that 9-period exponential moving average in the weekly after a peak E is coming into effect, and the MACD and stochastic are dipping lower, but they're still very strong. So it's the daily that's going to be the benchmark here, the rudder that takes us either much lower, or there's still some internal strength, and you can see that by the VIX only being at 12.06, only up 4 cents right now. But it's in the under 13 is still very good, and it suggests that there's buying pressure. Now let's continue. On the upside, a breakout of 18,590s, that's 90 points from here up, would suggest that, yeah, we're going to retest the high of August the 15th. Now, what's really important is I'm going to not do the 120-minute chart. I'm going to show you something here that I also show my subscribers. What I said that the 9-period moving average, that maroon line, has been it's walking the 9-period moving average. So that adds another dimension of criteria that we need to be watching closely. So now let's go on. We've got the SPX.X, that's the S&P cash. That is trading at 21.83. It's only down 3.5. But the most important thing about it is that it's above the 21.79 level, which is in fact the 9-period exponential moving average. So watching it closely over the week on Friday, if it's under 21.66, that's going to be a big negative. If it's over 21.95, I'd say, that's pretty darn good. QQQ series, QQQ, quickly, I'll do this in greater detail, but it has started leg C because it's stuck above 118.01. That's what I've got as the high of the week of the 26th, 118.01, and it's gone to 118.12. These are just nominal new highs all the time that we're looking at. So let me just make that a little softer here. And I'm going to do this as we're about to go to a break. Here we go. IWM, 124.81, up 18 cents. The gold index, God, these politicians all the time. We've got elections tomorrow. How do they get permission to call us all the time? Where do they get this override of the telephone bill? Gold is down 6. This has a characteristic of, I don't want to rush this. You know what? We've got plenty of time. There's nothing to do here. We're going to watch that market down 43 in the Dow, down 361. I'll be right back, and we'll go on with this in greater detail. I think this is a good day to do it. In fact, we're on the cusp here of doing some important things over the next week. So we're going to watch this really closely. I'll be back. Basil Chapman, Typer Technicians out.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I had a question, an email from someone looking at the thing. But so how do I get these parameters? So let me show you on the S&P 5-minute chart. This is the cash. The reason I got this left side, right side price time match with that, that's called the Chapman Wave inside wedge. It's just hit it exactly to the time, but it's just broken key support levels. And I said this earlier while I was talking. I said if it breaks under a certain level, you could go to the 200-period exponential moving average. And this is saying to me, what we're looking at, and also this is based on my own Chapman Wave fives. This is it was stimulated. The idea was stimulated by Elliott wave, but really uses some Elliott wave, but mostly it's Chapman Wave methodology. So it went to a 5 at a peak F. If you had patience, I thought initially this D could be it, but once it held the 9-period moving average and this little green line you can see it was still going up, that said to me, just be careful, have patience. Now I was about to go short right there, and then my show was coming up and all that, and I said, you know what? The other day I did that in the middle of my show, and I never thought I thought I'd visualized it perfectly in my mind, and I never did. I missed the peak. So I lost, well, it was only a point, but that's not a big deal. The issue is that I was wrong. So I thought this time don't overlap. So I missed a nice trade. One of the reasons why I'm upset is that I think this is the trade that tells us that we have made it to confirm for me that shorts on August the 12th could in fact start to work, because there were signs with yesterday, with the VIX being higher, but the Dow ignoring it. I think yesterday was insurance, that many fund managers who were back were buying insurance. That's why the VIX was holding higher. This is my thinking. So now there's a question that I want to go to. And so many people, I've got emails all over the show, ask me about this I'm going to go to it right now. This is the XOI. Just please someone remind me about EEM. I need to get to it. I wanted to do it yesterday. I did do it last week, but I forgot to do it again this week. So this is oil. This is the ARCA oil index. Now the pattern, the reason why I've got this particular pattern here is because someone in the den said that they are long Gush, G-U-S-H. Now, I'd never seen Gush. I think I saw it once before because there was a point where I thought, I'm going to make up a whole list of all the fun names in all the, like Dust, Gush, Corn, and just make up a whole list of these ETFs and ETNs, just for fun, to keep them, because sometimes it's an easy way to remember something that otherwise you might completely be forgetting. Anyway, so Gush is it has a different waveform, and I went through all the different oil charts. I finally found something here, the XOI, which is made a peak seed, and it's gone really sideways for a while. You can see this trading band, slightly lower lows, but actually slightly lower highs as well. But holding with above the 200-period moving average. And all I can say is that I've said this for a while. I think oil is in a trading range. The upside is limited. There's a chance that the downside could be a little bit limited, but I think the downside is freer to go down than the upside is to go up. That's number one. Number two, Nosh is a good one. The reason why I'm looking at this is that it made a peak C, the XOI index, at 1,149, right, 35 right now. It's down $1.25, but it made a high on the 18th of August at 1161. So that's what, 13 points away, 12 points away, and it's come back. And this confirms for me that it's kind of in a trading range. So now I'm going to go to Gush, because Gush. Now let me show you Gush, G-U-S-H. And the person who has it doesn't know what it's based on, which is very interesting. I'm not sure how they could have picked such a successful trade, not knowing it. But anyway, if you look at the weekly chart, it's gone to, let me put what's the concept of the Chapman wave? Look for the lowest, most identified low bar, and merely count each successively higher peak. And you want to get to a fourth peak D. Lo and behold, we get to a D. And then it pulls back, but then it goes back above the 9-period moving average in the weekly. It's holding very nicely, a Gush. This is the DX Daily S&P Oil and Gas Bull, 3 times Bull, 300%. So right now it's up 79 cents. That's 0.90. It's almost 1% at 88.86. So the question is, what about it? I'm going to suggest two things. One is, if you've got profits in it and you're able to, without violating any rules, because this might be in an IRA or whatever, you can take something off here. But out of your position, it would only be a third that you're taking off. Why? Because it should have gone straight to the 9-period, the 200-period moving average of 92.76, and it's already in peak E. The MACD is okay, but it isn't really positive. It's kind of cross-positive in an M formation, so that means there's a little room to go up, but you've got to be careful it doesn't deflate low. Stochastic had a big sharp move to the upside, but in fact, it's not looking all that great. So that's my recommendation. Excuse me. Just if you've got a profit, take something off right now, because it's had a really nice run and you sat through the decline. I don't know when you got the dust, but if you're able to, I would definitely take something off, right? And the rest looks like it wants to travel towards the 92.76 area, which is actually 4 points higher. So this is a very important moment. Why? Because the 120-minute chart is holding very well. It's in a buy mode. MACD is at 92%. The MACD is strong, and the stochastics at 92%, and it's only an A, B. This is leg C. I think it's going to go a little higher. So that's what I'm saying. You know what? If you don't want to take anything off, if you prefer not to because of whatever the position is, then do this. Put a stop at 89.16. If it slips under 87.86, that's 1.5 points. I'm quite fine with that. If this put a stop for at least a little bit of the position you have, a third maybe, at 87.85, and that would that's a penny below the low of today. And that, to me, I feel comfortable in that situation. Only because it's in E, and I don't yet see the strength that says it's going to try for 92.76. And if it does that, and you're still not stopped out, then at that point, right at 92.76, I would then take that 1/3 off. Hope that helps you. And I can only do it more short term than longer term because I have to watch the parameters. Above 93, that's really positive, and below 86, that's not so good. Okay, that's just making it simple. So now the USO, another question about oil. Where is oil going? What do we do? Should we buy here for a rebound? Well, have a look at this. The USO, which is the United States Oil Fund, is at 10.41. It's up 2 cents. Here's the kicker. Look at this. What do you think this is? Have a look at the chart. Don't even look at the name. Have a look at this chart. Look at that leg. Powerful leg E. Powerful leg B in the weekly. Powerful leg something in the monthly, but it hasn't broken. It's close to breaking the resistance. What is this? This is the XAL. This is the ARCA Airline Index, trading at 92.62, up 2.61. That's suggesting kind of what I'm talking about for a while, that in fact oil has limited upside, but the potential for much more downside looking out over the period of 2016 for the rest of the year. That's that. And then a quick question I had was, could I look at Facebook as we're going to a break? Facebook, A, B, C, leg D, another leg D. Oh, it's worth looking at this as well. So now I said EEM. As I'm going out, I'm going to put EEM. Yes, I'm going to keep EEM up. I hope I do in the break. I come back to EEM. Basil Chapman, Dow's down 51, S&P's down 4 3/4. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So yeah, I need to do EM. I've been asked about it a number of times. So EM has a spike after going to a peak F top. This is the iShares MSCI Emerging Market ETF, and it's trading at 38.07, down 14 cents. Yesterday spiked to the upside, created in the weekly chart an F/C. Everything about it says that it's got enough strength to lean more towards the C, peak C, that it could still make a D over the next 2 weeks. The weekly chart is telling us the MACD is good and the stochastic is at 89%. The monthly chart says, yeah, it's a good start in the technicals to be quite strong, but doesn't mean to say that, in fact, it's moving substantially higher unless there's a close above this doji candle of last month, which is the high of 37.98. And it's a little bit above it right now. So that's going to be key for me in the monthly chart. Most importantly, what is this? Is this a G/A? Do you realize that a G says, oh, watch out? Then A says, woohoo, going higher. I don't like when that happens. And to get an A so quickly after making that peak F, when the market generally is in a tentative position, I'm inclined to lean towards the G and say, you know what, let it unfold. If you're long, I would just hold it long, and I do almost the same as I was doing when we were looking at the XOI and we was looking at Gush. I would say, you know what, at this particular point, if you've just got in, I would definitely have to have a stop at about 37.73 in the middle of the gap, because if it breaks that, it could very quickly fill the gap and start and make it look like a Chapman wave right arm extension. That's where you've made your top, you come down for a little while, and then there's a sudden move to the upside. It's almost like a rogue wave. But the technicals in the weekly chart suggest, hey, don't get too carried away on the short side. This is acting well. That's why I don't want you to do anything. Now, the question is, would you buy it here? Do you know that if I... this is a little different to where I was looking at some of the housing stocks for someone, and I looked at BZH. And what I said was, BZH is in the housing. You've got the wind behind you because you've got the lower interest rates. So while this is in leg D at 12.47, BZH trading up 80 cents, up 6.86% today in this gap to the upside in leg D. And a weekly C, I like the chart, and I like the fact that the low-priced housing stocks, look at Toll Brothers. Toll is still struggling. Toll is... it's made its peak D, and it's just resting both in the daily and the weekly. It's not breaking down, but it's not moving higher. So in that instance, I had a different attitude. I said, okay, yeah, this is D. This is, in fact, maybe near the end of this particular move. But don't be afraid to nibble right here at 12.48, knowing that you really want to be buying it closer to the $10.78 area where there's a moving average support. But that's a way to look at it. Now, this is completely different because we're looking at right here, EEM. I don't know if I want to nibble here because you've already gone to the 200-period moving average in the weekly, and usually that offers a barrier. It's like an electric shock. You know, they used to when they finally found out that sharks were using electrical current, you could get shocks to turn away from wherever you were. Back in South Africa, there was this beautiful beach area, warm water and everything. Of course, beautiful waves. It attracted sharks. And people were bitten, in some horrible accidents. And then eventually they put this electrical current, this wire at the bottom, and they never had a shark attack for 30 years or something like that. So this is the same kind of barrier. This is a shark barrier right there, the 200-period moving average. It attracts you, and then it pushes you away until you get accustomed to it, and then maybe you can go above it. So I'm going to just say this is different. Yeah, you have broken out, but you're broken out with weak technicals. The other was purely strong technicals. And the MACD and stochastic in the weekly chart is good, but not good enough for me to take a position. I'd either miss it, or I'd have to just wait patiently from 38.10 to go back into the 36s. Someone wake me up and remind me in the 36s, would you buy EM? So that's that. And now what I want you to do is we'll come back to the housing, is back to the Facebook. I did that just before the break. You see, Facebook, so here we are. I haven't updated it. That was at 128.33. That was a peak D. What do we look for in the Chapman wave? 4 peaks, and then you got to be careful. Then, of course, there's a little turnaround. Now I can put an up arrow. I wouldn't have done that initially, but it went to a peak A, and then a B, and then it pulls back and it has a little miniature A and B right there. This is called the Chapman wave overlapping wave. It means that when it takes out the previous it pulls back. And then if it takes out the current peak on the 23rd of 125.06, it should immediately challenge the one on the left of 126.09. If it takes it out, you've got a parallel wave C, and that should take you to a D. That's the explanation of the Chapman wave. If you've got my CD introducing the Chapman wave methodology, I go through this in great detail. And I haven't sung the song in a month. In a year, I don't think. So the Chapman wave methodology. So here we go. We've got C, and then it goes to a D. What do we look for? A D. What do you want to become a little bit careful? Doesn't mean to say you need to do anything other than raise your stops, etc. on some part of it, is to say, and D, I've got to be careful with the stochastics at 90%, and the MACD is good. Facebook at 130.67, up 94 cents, giving back a little bit today. Yeah, that's an issue, but it's not a big issue because the monthly chart, the weekly chart is still very good. Monthly chart has gone to a new leg E in a straight up move. Facebook is very, very soon going to have a pretty good digestion of all these gains. Now I have to call this G/C. I don't like to do that. I like to just be G/B. I like to be absolutely clear, but this is not clear because it's gone in an extension to the upside, and each extension seems to want to pull back. Look, all of them. That's the characteristic of this current move. So the MACD is good, not great, but good. The stochastic is 84% good, but not great. So I'm just going to say that if you're long, stay long. And at this particular point, my bias is not to say that it's a G. My bias is to say it's actually a B, and that it could still go to a C and D over the coming weeks. So I'm just going to say to you, if you're in it, usually I'd say take a little bit off. I like it. I don't know. I'd rather be looking to put something on in the 127 to 125 area than take off anything right now. So I hope that helps you in Facebook. Looking really strong. I might change my opinion tomorrow, but right now that's the way it looks. I don't see any reason why I should change my opinion unless there's a very sharp drop by the end of the day or into tomorrow. But right now it's holding very nicely. Next question I had was crude. Just to crude oil one more time. I'll do it with the actual contract. See, crude oil is stuck. And now, by now you should know me. If you see anything like this, what do? I grab the top, I grab the bottom, and I draw a rectangle. And I say, okay, those are my parameters. Very clear on crude oil. Using the Chapman wave methodology and calling this an inverted Roman candle, if there is a move in crude oil that holds it for about 2 hours, I want the 120-minute bar to, I'd actually like the 120-minute bar to hold for at least 2 bars. So you got 240 minutes, 4 hours. If you can hold above 45.55, let's call it 45.60. If crude oil can hold above 45.60, it should go and retest the high that was made yesterday of 46.53. If it fails and it closes below today's low of 45.55, watch out, it's going to retest the low of yesterday. That's the methodology I use. But if you look at the weekly chart, it's got the Chapman wave H pattern, lowercase h pattern, and that says that if it does take out the low of 43 of last week, it's going to be a real quick trip down to the 40 level. 39.92 was the low of the week of the 5th of August. I hope I'm getting there, and I'm going to be back. Dow's now only down 47, S&P's only down 441. Basil Chapman, I'll be right back. We'll talk semiconductors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Yes, a couple of quick questions here. Yes, in the den, this is, in fact, Albert, this is XOP. I remember now, I knew the chart pattern, I knew exactly what was going on, just couldn't remember the symbol offhand, and then it suddenly came to me, it's XOP. There you are, it's exactly the same thing. I like this leg E. It has a slightly different look, maybe in the time that we've been talking, it's improved. I like this, and also, I could not put a down arrow on that D, because the MACD went down and pulled and came back up so quickly. Normally, I expect that it's going to make an M formation. So at this point, I'm going to say with what I said before, make a stop a penny below even today's low in your GUSH, G-U-S-H. No, I don't see it. I don't see it at all. Let's see. So so that's what I wanted to say. And just let this ride a little bit higher and have a trading stop on 1/3 of your position. And I did Facebook, did that. Oh, I've got a caller. I've got a caller, and I don't know who it is. Caller, who are you?
This is Tim.
Hi, Tim.
Hey, I just started listening to your show a couple 3 weeks ago or whatever. So I'm relatively new to your program. At that time, actually, there was somebody who called in about the DOG, which kind of brought my attention to it. And I was just wondering what your take is on it at this point, because it seems like the Dow seems to be topping here, but I'm not sure whether you're short or what.
Okay, so we are actually long the DOG. We have a position in it, a half position in the DOG, which is the DOG is the 1-to-1 short the Dow, the diamonds or the Dow. In other words, if the Dow goes, the Dow is now down 2.26%, and this is up 0.10. So they don't work exactly the same, but it's the best thing that you got. The SH is 1-to-1 on the SPY, and the DOG, the dog. And it's really, in many ways, it is a dog because you really need to get the trend. Otherwise, it's just going to kind of fizzle and not do very much. But and actually, I shouldn't say that. I happen to like dogs. So, but we have a position in it. And what I'm going to say to you is that it's trading at 20.56. I'm going to do 2 things. One is it's trading right now at about that position. If you want to match what we're doing, but I've tightened the stop on it. So if you want to match what we're doing, we have a fairly tight stop on it. One of the reasons is that my suspicion was that because the weekly charts have been so powerful and are holding so strongly, that it might be a position that we take because there is a sudden slide in the Dow, but I immediately see that, in fact, the weekly charts are still holding well, and therefore I've got to be careful because it needs maybe the market like it did on July the 20th when it pulled back at that peak C, and then went to that requisite that the thing we always look for in the Chapman wave, the leg D, the fourth highest leg. That took 9 days down and 9 days up. And what we're looking at here is that we've taken, today's the 15th day, and there isn't a move above yesterday's high. And I think now something is different in the chart. So the MACD is not very strong. Stochastics, okay, but not great at 48%. So here's what I'm going to do. If you're looking at a position that I don't want to give you to say to you, yes, I would buy it, and then not be able to give you all the stops and everything that we have. But I just want to warn you that in my newsletter, I'm capable of adjusting. I'm capable of switching on a dime to the long side if I see that it can go. But also, much of the time, when we have a position, it usually works. And I might not get out in time, but usually it does work. So in other words, this could work, and then because there's a market turnaround, I wait a little too long before we take the best of the profits. Sometimes that happens. So here's what I'm going to say to you. If you're looking for protection of a portfolio, I think the DOG could serve you quite well. If you're looking for a trade, initiating it right here at about where we've got it, and I'm going to give you slightly different parameters. If you buy the DOG at 20.56 right now, somebody heard us. It's now 20.58. I would put a stop in at about 20, under yesterday's low of 20.50. No, it's too tight. Make it 20. If you're prepared to have a 20.48, if you're prepared to have on whatever position you take, and I wouldn't get a very heavy position, but I would get a position. If you're prepared to have like a 2% stop on that, I think you have the potential for a really nice trade if the Dow by Friday is trading under 18,320. I think we've nailed a short term. It's already been going on for, as I say, for over 2 weeks, but that's where it will accelerate, and that short term sell-off could accelerate a little bit more. I would like to see a sell-off right now. That doesn't mean the market necessarily has to listen to me. Reason being, there are so many charts that are right on the cusp. I don't know if they break out, but that's indices. They actually have room to go much higher, but it would be frustrating. I'd rather have the pullback that I've been wanting, and then we're going to be looking to see when the market comes down to a certain point, is this where we want to really fully load with a much bigger position, thinking that the market is going to break to the upside very strongly in 2016, or do we still want to remain cautious? So I'm saying to you, yeah, I would do that. I'd start a position here. I would have a fairly tight stop on it. I wouldn't get carried away. If you want to treat it as insurance, you've got to think of it one way. If you want to think of it as a trade, you have to think of it a little bit differently. If you want it as insurance, I'd make the stop a little bit wider, just a little bit wider. If you want it as a trade, it needs to work, and it needs to work. I'd say today's Wednesday. By Friday, we need to see some nice profits in the DOG. Don't expect spectacular, because it's only going 1-to-1 against the Dow moving higher or lower. I hope that helps you. And you know, and if yes.
I was going to say, it sounds like you're in and out of this quite a bit in your newsletter. Is that what I'm hearing?
No, we're not in and out. Usually we wait for peak Ds in the Chapman wave methodology, and my tradition is to, at that point, initiate a DOE, always to initiate some kind of insurance or to buy it. And sometimes we actually also in the 3 times long, 3 times short, but at a different price. So that makes it, we've got a situation where, in this particular instance at 20.53, we bought it on August the 12th, and let me just check here. August the 12th was the low right there. I'm just signaling it right there. And you can see we've been chopping around slightly lower and quite a bit higher. We've already gone to an A, B, C, D. We've already had a pretty big move in the DOG. It already hit 20.81. So it's pulled back, and now I think it might be starting another move to the upside. So I'm just saying to you, it's not one that we trade in every week or so. This is once in a while. But yes, we do trade it. And
I was just going to say, it looks like what I really need to do is check out your newsletter.
If you get it for a trial, I think that this is a perfect time because you can see what we're doing. I explain it. If you get it for a trial, you'll be able to look at a lot. I sent like 20 charts out over the weekend because they were explanatory, and I explained the method, what we're looking at and why we're looking at it. So I think they could help you a lot and just give you a sense of what I do, why I do it. And I always recommend, if you're just beginning my newsletter, don't get carried away with the trade. Start small, get a feel for what I do. And I think that, I've had some subscribers who've been with me for years and years and years because I really tried my best to get the turns.
Excellent.
So thank you so much for calling, Tim. I look forward, if you do become a subscriber, even a trial basis, I look forward to that. Thank you very much for calling.
Thank you.
Thank you. So, folks, Basil Chapman, Dallas 47, and I'll be back, and we want to look at a few things as to what we're looking at for the rest of the week. That's what I think would be important.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Quick questions about short. So the EM, the question is, do you short it or buy it? What? I wouldn't be touching the EM right at this moment. I suspect if our market does pull back and down 50 is not a big deal in the Dow, down 5 in the S&P. I really want to see the Dow in the low 18,300s, and then I'll feel a lot more confident that we aren't going to do this, which is what I was talking about, which I described to my newsletter subscribers. Actually, let me just find the very right here. Going once, going there it is. So this is what I discussed with, I can't say discussed because they didn't give me any, it was just me, my monologue. that there were 18, actually it was 16 to 18 on the upside, where you went from the July 20th high to the peak D and E. That was the requisite. That's what we expect. All-time high at 18,668. And now we've taken, today's the 15th day, so 16, 17, 18, so you go maybe 3 days if you want to match that. I don't see the technicals having the strength to match it at this particular time. Could be wrong, but I just don't see that. So I'm suspecting that we just got this lower lows, lower highs, lower lows, lower lows, and at some point there'll be a sudden slide to the downside. That's where I'm going to be looking to say, okay, now are we getting ready to buy, or what's the situation? And so that's that. There are a couple of things that I could talk about. Let me just do that while I'm here because it pertains to where we are in the marketplace. Which one is this? So every day I give on my newsletter, I used to just the daily and the 120-minute chart, but it's so complex, and I want to show the weekly, I want to show the monthly, that I give this quadruple look in the time frames, daily, weekly, monthly, and right here is the 120-minute chart of the EM every day, of the E-mini every day. I sometimes every day I put this in the den as well. So I don't see anything going on. And let me just double check. Gosh, that is interesting. I am sorry, I haven't been getting those texts. So yeah, so that's what I do. And the other thing is, for instance, I talk about this. You say, well, what on earth has this got to do with the stock market? It has everything to do with the market, the way I look at it. See this here? I don't know who that is. You don't know. That's not Federer, is it? Anyway, look at the headband. There's a guy. Headband, pinky orange. Pants, pinky orange. T-shirt or shirt, pinky orange with other colors, white and green. Shoes, pinky orange with white. The color coordination between the guys, it's just, to me, it is so important that it's happened at this time, in this particular era of the U.S. Open. These are all things that I put together when I'm looking at my mega look at the markets. I do many things. This is the Dow analysis I did at the beginning of the week. On Saturday, I sent this a very detailed look at the markets. We're in a sell mode. In the daily, haven't got a sell signal even yet in the weekly chart. A lot has to happen to get there, etc. It's comprehensive, I can tell you that. All right, so let's do this. I'm going to go through the numbers now because we just got another minute or so. There are questions. I think I've covered all the questions that were there. Yeah, I think I've covered. Oh, XRT, just real quickly, the RRTH, the retail index, see it's pulled back very sharply, made the peak E top in the daily. Made a peak E in the weekly, and it could be a peak E in the monthly. I'm looking at this. I would suggest to you that retailers are getting really nervous. So that's what I wanted to mention. The XRT is a little bit different chart formation. It's holding a little bit better at the support at 44.05. So that's the S&P retail. The other one was the market vectors. There we go. VIX index. Watch the VIX. If the VIX stays in the 12, 17, 12, in the low 12s, that's one thing. If the VIX by the end of the day actually starts to move to the 1260 area, because the market has suddenly taken a tumble to minus 80 Dow, minus 8 in the S&P, then you're looking at selling going into the close and into tomorrow. So far, this is just a meandering sideways movement continuing. So you want to see, if you are short, you want to see the S&P, the VIX push much higher, about 40 cents higher. And if you're long, you say, hey, VIX, stay down here in the 12 area, or even go to 11, that'll be better. Hey, folks, I'll be back tomorrow. Have a great day. You might want to check out my newsletter. You'll find it very interesting and hopefully successful. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.